Hello and welcome to Finextra. I'm Emily Haller and I'm here with Eric Benz and Nick Williamson of Credits. And we're at Money 2020 Europe in Copenhagen. Thank you both for joining me.
Thanks, Emily.
Thanks.
There's sure to be a huge amount of discussion about blockchain here in Copenhagen. Why is blockchain part of the future of money discussion?
Yeah, so I think we're over the highest points of the hype cycle at this point, although we're still seeing quite a bit of interest, and I think that's coming from the maturation of the technology and how people are thinking about blockchain today. For example, a lot of people are seeing it less as building a new type of currency or a new type of government, and instead are looking at it mostly as a way of enabling people in existing markets and existing trust networks to actually interact together in a more direct one-to-one fashion. And that's actually what we're seeing here as we're launching our PaaS platform, our platform as a service, that allows people to go in and build those use cases in a way that's robust and in a way that is a little bit less of the payments hype that we've seen from a lot of the Bitcoin and cryptocurrency companies in the past.
Eric, is the technology now ready for prime time?
Well, I guess it would depend on your definition of prime time. I think we've seen, and correct me if I'm wrong, obviously, Nick, because technology in itself is a very interesting cycle and a cycle that has always done the same thing for the past couple decades now. It's nascent to begin with, and then you have to go through iteration after iteration to perfect that technology and make sure you create that marketplace. So right now with blockchain, there's a lot of noise going on, and because the technology is so nascent still, there really is no specific type of blockchain marketplace. What you see right now is an entire proof of concept market, so you have a lot of different companies wanting to build out different proof of concepts with whatever technology they can get their hands on, but the issue that companies are facing is it's not ready for prime time actually, because you can't do specific things on, say, Bitcoin blockchain, or there are some issues that people face with trying to extend Ethereum, for example. So really you have a couple different things going on in the space that really is starting to separate those companies that are building on blockchain technology versus those companies that are providing blockchain infrastructure, which is what Credits does, obviously.
And building on that as well, as we see in previous technology cycles, you often get a bit of an overhype of this is, we think about because it's so cool and you see the possibilities 10, 20 years down the line of here's how it could affect our day-to-day lives and us as consumers. But when a new technology comes about, it's actually generally much more useful, much more early on, sort of hidden behind the scenes and more of a B2B context. So for people using it in their underlying infrastructure inside the business, rather than it being something that you as a consumer really want to interact with and play with. Then as that technology matures and it becomes a bit more polished, then we start seeing it creep into consumer applications and services, just like we saw with desktop computers back in the 70s and 80s. They were mostly used for things like spreadsheets and other content design and other business-based tasks. Then in the 90s and 2000s, we saw a lot of people start using them for more consumer-focused things. Just like with smartphones, it started off with the PDA and the Blackberries back when the technology was just a little bit more clunky, but it still provided business value. And then we saw with the iPhone and Android, once we have that really polished, nice experience, that can be supported by newer hardware and newer ways of exposing those capabilities, that's when we really see sort of the consumer prime time for in any given technology cycle.
What should retail bankers be doing about blockchain right now?
Yeah, so right now I would say retail banks specifically should probably be concentrating on areas where they replicate a lot of processes internally. So for example, all banks today don't just have one KYC process. They have 5, 6, 7 different KYC processes for different departments, and none of those can talk to each other. So if you get a mortgage at one point with the bank, they can't then necessarily reuse the fact that they already know about you as an individual for the mortgage when you're opening up a brokerage account. So really looking for areas of duplication and friction between different siloed places of value or siloed places of information is where the retail banks specifically are going to see a lot of value in the short to medium term.
I think that value is going to be a really interesting thing how it develops, because everybody knows that there's a lot of value to extract from blockchain, but being able to separate the hype from the substance right now is going to be absolutely critical. And I think we're slowly starting to see that, but there is going to be a massive shift from, okay, so this is basically similar to every other cycle of technology, where obviously everything is quite nascent still, but the maturation process will slowly establish what companies are doing what specific things on that blockchain stack. And the way we see it is basically, it's another tool in the shed. So when you're building your applications, or when you're trying to fix what's broken within your legacy infrastructure, having blockchain there is another tool to take advantage of to make those processes more efficient is definitely going to shape the value chain and how this actually will work in a real regulated environment.
Eric, Nick, thank you very much.
Thanks so much.
Thank you, Emily. Cheers.
And thank you for watching.